Well, good morning, folks. Thanks for joining us. Today, we're going to take a look, of course, as always, at our Forex and price action. First of all, this PowerPoint, though, explaining the disclaimer here, the online material is developed by Admiral Markets Estonia for a global audience. Please take into consideration that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, of course, it has to be said that trading for exchange and global financial markets is considered very high risk and may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with this risk disclaimer and the content specified in this slide and the terms and conditions of the website and the company. So thank you for your attention. With that said, we can move on. Today's focus is going to be Fibonacci and wave trading, in fact. And always very interested in fibs and waves. Sometimes maybe you have time to take a look at, for instance, my wave analysis. So we can take a look at that and see what we can expect with regards to fibs and waves on today's market. Take a look at Admiral Markets in Twitter and Facebook, for instance. And if you want that wave analysis a bit quicker, you could, for instance, also sign up for my Twitter, and I give a heads up when the wave analysis is ready. So that might be useful if you like. This is the Forex calendar. In fact, first of all, the US GDP is something that's coming up with the high impact 5 hours from now. Otherwise, we only have Spanish GDP. That's it from the Euro side. That's quite a low. That has everything to do with the fact that there's public holidays in Germany, Austria, Holland, as far as I remember. Maybe France, I'm not too sure. Not UK, though, so I'm not sure. I don't think the session will be necessarily quieter because of a couple of countries having public holiday. But you know, it's good to realize that maybe just in case. And that also explains why we don't have many news events. We do have some on the U.S., as you can see, GDP and pending home sales. So, regarding the waves, you can find it by going to admiralmarkets.com, go to analytics, go to wave analysis, and every day around about 1 hour ago or 1.5 hours ago, you will see the current new daily forecast for wave analysis. And you can subscribe for weekly reports, by the way, by clicking on this button. And here you see the wave analysis of today. All right, so there's some text, and then you see a screenshot. There's some text and a screenshot. All right, so usually speaking, the text is supposed to be on the smaller side, just to add something that I can't really, express through charts, something of an addition or extra guidance there. So what are we expecting with the euro dollar? Well, if we look at this chart, we can see there is divergence between the 4-hour bottoms, isn't there? So that's something that kind of disturbed me with the euro dollar. We are in a nice channel to the downside, though, and I would say we're pretty close to some targets, but there's still space to those targets. So it's a bit of a quandrum. It's a bit of a mix, divergence, but maybe still space for this channel to continue lower. From an elliott wave perspective, to me, it looks like we're finishing some correction for more upside, and then who knows? We'll have to see if we continue down, right? If we move up, or do we really continue higher? I'm trying to open my drawing tool in the meantime. Good. What I mean is this: do we continue up like that? Really up, or do we make a correction up for more downside? That still remains to be seen. Eventually, I would expect some support, but who knows? This is the channel on the hourly, and you can see it's making, in my opinion, still corrections marked as these WXYs, basically. And looking for maybe the very last part of it, that's the question. So far, as long as we stay in that channel, I would still expect some downside to these targets. If we break out of that channel, of course, then things are looking differently. So on hourly, that's very important, this channel. I saw resistance at the magenta, I saw resistance at the purple, or if we break below the bottom, there's potential for downside, isn't there? Those would be the three red arrowed ideas regarding the waves. From a 4-hour perspective, by the way, it looks like we're finishing an ABC for W and X, and then now a WX for X, Y for Y. Pound dollar. And regarding the targets, basically the targets are just looking at the green Y and the YY compared to the purple W and the green W. Now let's take a look at pound dollar. Pound dollar 4-hour chart, an uptrend channel still, but price breaking out of it. That's of course a big thing, and I changed it a bit. We got some targets lower here. I think price could get there. We could see follow through to the downside. I would say we are making kind of like an ABC for W and X, ABC for Y at the moment. That has been my thoughts already for a long while. Actually, the only thing is that I thought X could go a bit higher. That's the only difference basically between now and what I was showing through these wave analysis. Here you can see the 5-wave impulse, and now also potentially 5-wave. We've got 1, 2, 3. So I'm looking for wave 4, 5 continuation to the downside. That could be at the 236 or the 38.2 fib. We can see, for instance, price move up or down, excuse me, to these targets. So that would be the idea on the pound dollar. I like that pound dollar downside momentum. We can take a look at that. This is the dollar yen. A bit of a mix, in my opinion. A lot of corrections. Here you can see the options, just because there's so many trend lines and so many fibs. It could go up, down, up, down, up, up. A lot of options here. If you do break this blue line, which we just did, there's that maybe small downside to the bottom. So with that said, now let's head over to the live charts and take a look at the pound dollar primarily. Now we know how the wave analysis looks like. We can focus on fibs on these majors, and you can see price has only reached 23.6 at the moment. The 38.2 would be nice if price can get that high. There's a lot of confluence at that 38.2 fib, so I'm not sure if we can get to that level. But we have an H3 short, we have a daily pivot point, and we have a 38.2 fib. So obviously there's a lot of levels there. So that could be resistance. Price should not break above this level. Otherwise, it's not a wave 4. This is not a wave 4. If this is wave 1, 2, sorry. This is wave 1, 2, 3, and this is 4. Then 4 should not go above 38.2, normally speaking. It could potentially, in theory, hit the 50, although it doesn't seem likely. It could. Max would be the 61.8, because if it goes above there, we're getting into the territory of wave 1, and that would probably, how do you say it, would take away the logic of trading it to the downside, right? The setup would not be valid anymore. So we got good confluence at that pivot point right there. Otherwise, other than that, you can see daily candle, very, very bearish. Big daily momentum down. So any small retracement could be indeed enough for that downside, down to the minus 272 target, for instance. All right, here too you can see minus 272 just below the L3 and daily S1. I think though that it could really break lower. It could even go up to down to the daily S2 and the minus 618, for instance. Maybe even get a bit of extension till L5 and minus 1, DS3. Who knows how far it could go, but at least down to this minus 272 would seem likely. Now the question is, do we get the follow through now, or will we first go up to hit that daily pivot point at 38.2 fib? That's the question. And it's too early to tell. If you look at the moving averages to get a guidance on what the momentum is at the moment, hourly is certainly down. 15-minute is a mix. So if the 15 minutes starts to become very like bearishly lined up like it is here, then I wouldn't expect price to go back that high. At the moment, we're not that far yet, though. Euro dollar, also looking bearish in its moving averages and following that downside at the moment. Respected the daily pivot, was just above the H3, but now it's back below it. This is looking pretty bearish too, in fact. So, as I said, there is that chance to continue with that downtrend channel that we had on the euro dollar and in the fib and wave analysis chart. So this fall could certainly happen. Now, at the moment, though, I like the pound dollar a bit more, just because there's a bit more space, I think. But who knows? It could fall further than I expect. But at the moment, there seems to be less space. Doesn't mean, though, that we couldn't get to the weekly S2 or the daily S2. So, you know, in that regard, it's still tradable. We got some good bearish price action signals. Shooting star, for instance. So maybe if you traded that, those were especially good entries because price has retraced nicely to the daily pivot point, and you have more space. Whereas now the space is getting tighter and tighter. So you know, any entries in here, up in here, were great, and you're up about 10 pips, I guess. Now the space is getting tighter, but still, if the 50 momentum changes down, because now it's still a bit of a wash, it's a bit of a sideways move, because the 21 is not below the 34 at the moment. But if it does, then things change. Alrighty, let's take a look at the dollar yen. Dollar yen is trying to push below these bottoms, in fact, but hasn't broken it. So it's stuck in kind of like a descending wedge. Let's see what side it breaks. We got a lot of bearish momentum at the moment, so would expect a bit more downside than up at the moment, but who knows? Let's see if the support can break indeed. But the dollar yen is the least interesting in my opinion of all of them. I like the pound dollar by far the most, but we do have this in play, like that. And so that looks like a descending wedge, or maybe even a triangle, contracting triangle. Whatever it is, it looks bearish, considering the 15 and hourly momentum. Let's take a look at the 5-minute. And we're getting a break of a 5-minute fractal here. Could indicate the first attempt to the downside, but still, I don't like the support level right here, right now, right in front of us. So personally, I would rather wait for a break of that. So that wraps up the pound, euro, dollar. For those that were a bit later in the room, we looked at the wave analysis and fib analysis of the euro, dollar, pound, dollar, dollar yen that you can find on the website. Go to Analytics, Wave Analysis on admiralmarkets.com, and you'll see what we've discussed, and also discussed then accordingly on this website, on this chart and the platform. So that's just a quick update. You can see pound dollar, although it's breaking to the downside, that's why I'm still cautious, because the moving averages are flat, and if they're flat, you know, price can dip and return back to the moving average and stay there, you know, so or bounce back and forth like that. So before I conclude that the H3 daily pivot point 38.2 confluence at 167.44 is out of reach, I am careful. If it does indeed cross over and start to make momentum, fine, I'll trade it to the downside. If price, however, doesn't do that and starts to inch forward, or higher I should say, then I would be looking for shorting it at this level. Right, so those, I'm primarily interested in the pound dollar today, with second the euro dollar. So that would be the way to to tackle, I think, the pound dollar. Let's see if it gets up there. If you can keep an eye, if someone can keep an eye on this when it gets closer to this level, that would be great. Then we can, otherwise I'll be looking at other charts, and I have other charts, but then I get distracted. So I'd rather focus on this chart only, so that they're not too long pauses, because multitasking is, I can do it a bit, but not too much either. So let's see if this pound dollar can get back to 167.40. Now let me go to a different template. Apologies for that, but I want to use a different template. I want to use a template where I have a lot of moving averages. And you might wonder, Chris, this is not a moving average webinar. Why would you even consider that? Well, ironically enough, if you really want to dive into more understanding of waves, this is pivot points. Get rid of that. Using moving averages is a way of doing that. Now, that might be new, might not be new, but you can use moving averages in the AO, the Awesome Oscillator, to get more guidance on what the wave count is. And it's pretty accurate. I mean, obviously, wave analysis will always have, it's not its full preciseness. That's for sure. That goes without any doubt. But in my opinion, that's not too bad. Basically, if you use wave analysis just as something of a of a guidance, and not as a a fixed rule, more like what is the momentum doing and how could that fit, then it could be useful at moments that make most sense, right? If it's complicated, then don't use it. It's not like a must for every time, and that's how I use it. I use it as a loose indication of what price is doing, and I use moving averages and Awesome Oscillator to get an idea what kind of wave count roughly it could be, and it just helps me get a gauge of market structure. But it's not like a fixed rule that I must do that or that. It's more of a loose interpretation of the market structure, and therefore I gain an edge on what could be happening in the future. That's how I look at it. So, I'm not too bent on making the wave count as precise as can be. Personally, I mean, I know there are tons of wave analysts that are very radical in that, and are very precise in that, and I don't think this topic should be approached with that precision, because wave analysis it just isn't that precise, right? So why put all that effort and frustration into making it as precise as it can be? For me, it's just a guideline. That's how I look at it. Anyhow, using these moving averages and Awesome Oscillator are very useful for making those analysis. So we'll dive into that as we go along with the charts. I'll give you some examples. I don't want to do much theory at the moment. Nikolai, I didn't see your question, only now. The indicators there, this is a moving average, moving averages that change colors depending on the direction. This is an AO oscillator. I had pivot points as well, and I had chart pattern indicator. And Andy Camarilla. If you were interested in one or some of these indicators, send me an email and I'll send it to you, okay? Let me post the email. There you have it. That's my email there. Just send me an email and I'll get back to you. So we already looked at the majors here. Let's see. So let's take a look at the Aussie. Now, obviously, we'll have to still add fibs. That could be a bit confusing, maybe a bit too many moving averages. So let me see if I have a template that's a bit, maybe this one is a bit better. I don't know. Well, anyhow, if it's too complicated, let me know. But it's just about these bands, basically. 3 sets of bands. That's all what it is. Okay. Odd USD is making a pretty big momentum burst to the upside. It couldn't break through 92. That was a very important level. And price is really bouncing up to the upside. I'm not sure what kind of Aussie news there was today. There was some Aussie news at the Asian session, but certainly was very bullish, as we can see. Price getting a lot of momentum off of, guess what? Yep, the long-term moving average of the 4-hour band plus this horizontal level. And on the daily chart, if we look at this, we can see price is making a correction down to the zero line. Looks like a potential retracement now for more Aussie strength. Who knows? It does have a very strong AO reading here, so that would make sense. Let's take a look at the 4-hour chart. And hourly. There's a bit of a shooting star here, so some correction I would expect before maybe continuing. That's something like this seems the path of most least resistance. If you look at the fibs, for instance, and you put a fib from here to here, you see we hit the minus 618 target. In fact, I just took it off, but let me show you. We hit the minus 618 target, so we can move the fib from fib bounce to target. And if you do that, you can see price basically now respecting the 38.2 fib. If we get somewhere around 78.6 fib, it could be a pretty interesting buy with the stop loss below 92.50 and an entry here at 92.62 or 92.70. Pretty tight stop loss, and the target would be 93.13. So it looks a bit different, this AUD compared to the euro and pound. Right? Although euro is showing divergence and potential turnaround sooner or later, maybe not today, the pound is still looking bearish. The Aussie is looking like a good spike up that could get some follow through. So that's what I would say looking at the fibs. So that's something to keep an eye on. This preferably would be back to the zero line, and if you get something like this going on and then price bouncing and breaking the fractal, that would be another way of knowing that, okay, this is going up again. AO back to the zero line and price breaking after a consolidation or bull flag. So that's something to keep an eye on. What else? Yeah, otherwise, these moving averages are quite intertwined. There's a bit of, on this daily chart, there's a bit of bullish divergence here. Hidden divergence. Why? This price is actually still lower than this bottom, the second bottom. So we have here is actually a higher low. The oscillator is giving a lower low. Maybe that's why we're seeing so much upside, because of that. That could be hidden bullish divergence. So that could aid to the upside. But the moving averages are quite intertwined at the moment on the 4-hour though. This is not the daily, it's the 4-hour chart, but still. Pretty strong daily candle so far as well. We broke yesterday's high already. The only thing that we have to be careful of, as I already said earlier this week, is really last week's high. Still in play. All this upside could just be retracement of last week's bearish candle. So we have to just be careful of 93.70. So let's take a look on the 50-minute setup, 93.70. So if you aim for 93.30 at the minus 618, that should be doable. All right. So let's move on. Take a look at the Kiwi. Kiwi is looking totally different, isn't it? Let me take rid of everything here. Kiwi is hanging its head low still compared to the Aussie. In a very bearish momentum, you see everything is aligned here. And there's no divergence on the hourly. No divergence on the 4-hour. The daily, we can see it could still be retracement, right? Because price is, what is it? It's heading back to the short. It's heading back to the intermediate moving average of the daily chart. So we had plenty of breaks here. That was one of them. This is one of them. And in that regard, we could put a fib actually on this swing high, swing low. And price did stop at the 38.2 fib roughly with a wick there, which could mean the follow through to the downside at that spot. Right, price stopping roughly at the 38.2 fib. Maybe I have to correct it a bit like that. Now, still just a few pips away, but that can happen sometimes. So this looks like a very bearish momentum. So the Aussie is a bit different. Here, the Kiwi, if we break something like this, for instance, or maybe even like this, that could be a breakout to the downside. Let's put our, let's take a look at our normal price action slash candlestick formations. Kiwi shooting star indeed. As I said, that was a nice shooting star to 38.2 fib. Yeah, so we see pretty good space to the downside here. Be careful of maybe the weekly S2, but still there's some space down below here. So Kiwi looking bearish, just like the pound dollar. So back to the 5 now, or down to the 5. And we can see a break of fractal would be the entry. Just want to check the 15. We want 15 to be bearishly aligned, and we do have that now. We didn't have that here though. The hourly is very bearishly aligned. It's actually drawn apart a lot, maybe too much almost, but okay. Yeah, so that could be an entry right there at the break of this bottom. Stop loss above this top. For about 17 pips. Would also be breaking this this trend line in a way, or has broken that trend line in fact. The moving averages were aligned about, let's see, 15 minutes ago. Yeah, so this is actually the frac that we're looking at. This one, not the lower one here. That was actually already attempted to break. Let me see what the low is here. It's at 84.82, which means just a couple of pips below that, 84.79. $84.79. I'll try this one with a stop loss at 84.97. 84.97. 18 pips, but bigger size than normal on the maybe on the 5-minute chart. 5-minute charts, you could even have tighter ones. Like yesterday on the Euro Yen, it was a 12 pip stop loss. We'll take a look at that trade that we discussed yesterday soon. I wouldn't say there's a ton of space, but it's still worth trying it. If it doesn't break, if it takes, let's say, 5 15-minute candles and it just goes sideways, I'll take it off personally. So that if we do get momentum, follow through though, then we can trill stop it, and who knows, maybe it goes further than we think. That we never know. It's, our job is not to predict the future or something like that. So I wouldn't say that there's a lot of space, but I still think it's worth attempting because there's a lot of momentum. So, oh, thanks, John. We'll take a look at the pound dollar again. Bob is asking, what is the bottom value? Please, bottom value, the target. I will use a trading stop, so I don't really have a target in mind necessarily, but we do have some pivot points here at 84.52. Which is about 27 pips away. Compared to 18 risks, so that's about 1.5 to 1. If that's the value you're looking for, I'm not sure. Pound dollar, oh, pound dollar is not moving higher. I thought it was actually retracing back. Sorry, I misunderstood. I thought actually it was going to this back to this level. It's not doing that indeed. It's falling like a brick, unfortunately, not making the retracement. I don't see this going up to this level anymore. I think we can forget that. But what we can look for, though, is price to go up as a retracement still, right? This 5-minute move will probably finish, I don't know, within, let's see, 1, 2, 3. We'll probably still take another 40 minutes, maybe an hour. We'll see this bottom out, excuse me, and then make a retracement. And would expect one more follow through, but you never know. Because if price already gets to the target, then this could be it. And then, you know, New York, you could see retracement instead of follow through. That could happen too, in fact. So. It's a pity. Yeah, you can see I had, you know, the red arrow specifically from the 38.2. That's really one the fib I was looking for. Not so much 23.6, but fortunately, price stopping there and not here. Target 166.25. Wow, that's still a lot of space if it gets all the way there. So who knows? Maybe we'll do, with that much space in mind, who knows? We'll just see a fall, and if we see some bear flag like that, we might see the follow through indeed today. So let's continue. Pound yen falling to dollar yen breaking to the downside. Euro yen continuing to the downside. Euro yen quickly discussed yesterday's setup. We had an entry here at 86, 138.86, with a stop loss above at 98, just above this hourly high. Well, the entry could not have been better because it stopped right literally at 90.86, so that's good. So it was a 12 pip stop loss. We got right the turning spot, and I took it out personally at 36, right here. And the reason was on the 15, I was retiring for the day and didn't want to, I took it out here. I saw this bottoming already and moving back to the zero line like this. You see this hook back here on the AO, then I know that this is going to go back to the zero line. And I didn't want to, you know, there was no reason for me. This was not a trade idea. This was a swing scalp, not a intra-day strategy. So it made sense to take the profit here and not live through an Asian session and, you know, who knows, see this move back like that and then drop. Wasn't interested to that. I had 50 pips in the pocket versus a 12 risk, which basically anyhow boils down to a 4, which is a lot, right? Because it's 4.17 R2R. So it's enough. It creates interest. So there was no reason, so I took that off there. But I also took a swing trade at about the same level, a few pips lower from here, and I'm still in that trade. And I have to move the stop loss to above these stops. So same level, but a wider stop loss, but still in that trade, right? So I'm not sure, did anyone take that trade with me for 12 stop loss here? And if so, how many pips did you make? Or are you still in it maybe? We'll be curious. If not, no problem. It's not a test or something, but I was just curious. It was a nice trade, so it would be nice if someone caught that too. For 4-1. Maybe you're still in it, still dropping. Anyhow, that was yesterday, so quickly in between. Let's move over and take a look at New Zealand yen. I was looking for a pullback on the New Zealand yen. Unfortunately, I missed it. It was on my mind, this 38.2 fib here with the wick. Maybe some of you took that too. I don't know. All these setups, though, at the moment, from a fib analysis point of view, if you see what I mean, have already retraced, right? The pound yen, 2 very weak retracement. The euro yen, also very weak retracement, in fact, 23.6. But all of these have made their retracements. So if we're looking at fibs, the problem is that they've already made substantial retracements regarding the yen pairs, and they're all breaking basically to the downside. That's a bit of a problem. I mean, if you're looking from a fib strategy point of view, that is today's main focus. So I don't want to get too sidetracked by looking at breakouts, but in this environment, like the Kiwi as well, this is not really a fib trade; it's a breakout trade, right? So I hope you don't mind, but it's just that the fact is that basically, if you look at the Kiwi, we already had basically the pullback, right? If you look at this template here and you put a fib on this downside, price went back to the 38.2 fib. So unfortunately, sometimes we're looking at the charts and, this was the fib trade. Now we don't have it. Now we have break continuation, trades, right? Not pullback trades. Or this is the same with the New Zealand yen. So that's a bit difficult with today. The market is not really set up for that well regarding today's topic. Unfortunately, sometimes they don't really match up. But maybe we can take a look at other pairs that do, could expect a pullback. The dollar CAD, ironically, was also one that already had that. Unfortunately, this is not a good example, but if you put a fib on this entire downside like that, right, you can see we broke out of this trend line here, and price is in bearish mode. Moving averages all aligned. Price went back to the 50 fib, made a shooting star at the 50 fib. That was a nice trigger, and is moving down. So that, again, a fib trade that already happened. Now, what do we have left? A breakout trade potentially, right? But not a fib trade. Dollar CAD to the downside potentially. So let's continue. Maybe there's some other fib trade going on. All of these are breaking. The euro and pound out are massively moving down. I wasn't short in the euro because of the momentum already moving in direction of it. Let me show you this. But I didn't manage to stay in, unfortunately. It was too choppy. This pullback really shook me out, unfortunately. But yeah, there was already that downside momentum, right? But didn't stay in and didn't manage to get in because I wasn't trading the Asian session. Right? This was basically the reason why it's falling so deeply now. So let's move over. Let's move on. Sorry. Let's see if there are any fibs to be traded. Maybe on higher time frames there are fibs to be traded. I primarily look at lower time frames with you here. So I haven't done much research on daily charts, so maybe there's some grand fibs on the daily chart that I'm not aware of. By all means, let me know. In that case, would love to see your analysis then. If you look at a pound New Zealand, for instance, like this, maybe waiting for the 38.2, I don't know, it could make sense. But then again, there's a grand resistance here. I wouldn't do that as yet. Euro CAD, pound CAD are all breaking to the downside. So those are out. How about the Swissies maybe? New Zealand is finally breaking to the upside. Wow. So the Oz is getting that follow through. Look at that, finally breaking. You know, it was in the cards that it could happen. It just took quite a long time. So funny, the difference between the CAD Swissy, for instance, and the Pound Swissy moving down, CAD Swissy moving up. That has everything to do that the Pound CAD, of course, is dropping like a stone here. So however many currencies I look at, all of them seem to be breaking. I don't see many fib potentials at the moment. We had maybe a few hours ago in the Asian session or late New York, but not at the moment. So sorry, don't want to disappoint you, but that's just reality. So I would suggest not to waste time on that and take a look at maybe what could be traded as a breakout, if you don't mind. Regarding wave analysis, by the way, my primary focus is pound dollar, euro dollar, and dollar yen. Occasionally, I do some analysis on the side with other pairs, but these three are the only ones I really do day in, day out. The others, I just look at moving averages and AO as my main reference. And just looking, basically, if you look at the AO and moving averages, you're already kind of semi-looking at wave analysis, even if you don't realize it, because they're so intertwined with wave analysis that you kind of do it automatically, but then without really consciously even being aware of it, even if you know nothing about Elliott wave, because they're so connected and interconnected with each other. Especially if you use the AO and the strength of the AO for wave 3 and divergence with wave 5, and you'd use hidden bearish and bullish divergence, for instance, for wave A and C and stuff like that. You know, you're not even aware of it, but that's actually the interpretation, the practical interpretation, but without really theoretically knowing about it. Funny enough. So that's a hidden advantage. So let's see how the Kiwi goes. It's been choppy downwards after this shooting star, but maybe we'll get some follow through here. If you look at the 4-hour chart, bears are in control, so that's good. Lower lows, lower highs, lower closes. You know, so there's reason to expect maybe some follow through now, finally. But as I said, if it doesn't, then I'm quick to cut the loss short, right? Because this is not a time frame where you want to like hang around and hope that the trade goes your way and see if it goes. Because if that happens, usually it doesn't happen. Either it's quick, you know what I mean, like it goes our way. And if it takes too long, then I don't want to live through choppiness. Sometimes after the choppiness, it still goes our way. Don't get me wrong, but there's also a lot of times that after the choppiness, it just, you know, then the stop loss is too tight to really live through a lot. Let me say it this way. You don't want to live through hours and hours of price action, because then the chance of price spiking up and then hitting our stop loss and then still moving our way is just too big. That's the thing. So let's see how it goes. This is the first candle that's pushing through. So I'll keep an eye on 5 more after this, right? So we still have some time left. So anyhow, let's do a recap here. Aussie is indeed retracing, but the Aussie is the only one actually gaining against the dollar, so maybe not too comfortable with that. So we're getting the 15-minute align on this euro dollar, which means that we can slowly but surely move into the 5-minute world now that they're aligned, using yesterday's strategy still. That is, because once again, for those that maybe were not looking at it, there are no fib, necessarily concrete fib trades at the moment, so we're looking at breakout trades. So when a 15 is aligned here, we can look to the 5 and see if there's space for follow through to the downside. And let's see, where are the pivot points? 1 second. Can't see what levels that are. Okay, strange, but anyhow, we do have a weekly S1, but I would say that that is already respected here on the left. All the pivot points are actually above us. The monthly, the weekly, the daily. So I would say there's a good space. If you look at the ATR too, there should be good follow through still. So we can look for the euro and add it to the list. Pound dollar 2 is getting a crossover here, getting the bearish momentum. So as I said, I wouldn't expect it to go up to the pivot anymore. Here too, we can watch for follow through to the downside. But this is going to take some time. We have to wait through some retracements first before we can get the follow through. So the euro and pound are setting themselves up with this slight preference for pound. We already talked about it. Aussie's shooting star. Let's take a look. Yes, that is a bearish candle that could see follow through, but I would say Aussie has the least potential personally, just because it's more of a mix because of this big upside. So I'd rather go with the flow and therefore trade the Kiwi, pound, or euro than trade against that momentum on the Aussie. That's just my personal philosophy. Unless Kiwi is, very close to a big pivot point, that would be the exception. Let me take a look with you here if that's the case. Shooting star at the H5. It is close to the monthly pivot point. Now that's just a tad a bit. If it would have been, let's say, within 5 pips of the monthly pivot point, then I agree. I would have probably joined you on that one, but it's just a tad too shy there, I think. I still see relatively some space if it goes back to you see the break of the weekly pivot point, for instance. It could hook back to that weekly pivot and the DR1, bounce off and go up to this one, and then find resistance. So I'll be cautious personally of that. That's why I'll be rather neutral. The dollar CAD, by the way, Adrian is asking about that. Let's use a different template here. Sorry for the template switching, but I want to have pivot points if we're looking at breakouts. Dollar CAD long. I'm not too sure. Yesterday's long did well. There was someone who was I forgot who. Apologies, but someone who said wanted to go long here, and although I wasn't a big fan of it, it did work out good. So great job for that trader. We did recognize the momentum and the engulfing twin here, and indeed a retracement of that engulfing twin leading up to some momentum up. So great job. Now though, considering the fact that price is respected the H3 here, the weekly pivot, and the 50 fib, which I was indeed seeing as a potential downside there, now we're actually at a breaking spot to the downside. But we haven't broken yet. So is it the long? Well, we are close to a bouncing spot. I mean, we are at a bouncing spot. We do have engulfing twins here. I can understand your reasons for it. Plus, we haven't broken the trend line yet, so we could use it to bounce off a bit, and then still maybe move down, who knows, or move up. So in that regard, I understand your reasoning. For me, I would be looking for, this is, for me, personally not set up well enough. What I would like to see is engulfing twins at a clear pivot point, which I don't have. The daily is above, the weekly is above, and the monthly is above it. So because the pivot points are above it, it's engulfing against the momentum in a way, if you know what I mean, against the pivot points. The other reason, if the daily would have been here, for instance, I would have agreed. I would have taken it myself too. The other method I would use is to use, let's say if we have the momentum still on our side, but at the moment the moving averages are pointed down. That's another reason why I still would remain neutral. The break, actually, to be very honest, isn't that set up, regarding the moving averages, is not set up as yet, though. The break could still do well, but from the moving average perspective, it's not set up as yet. So let's see. If it fails to break this bottom, indeed, the longer it fails, the more likely it will make that upside. Totally agree. So, I don't want to discourage you. It could be I understand the reasons, definitely. It's just engulfing twin at a bouncing spot, so who knows. The reason is that the daily pivot is too close for me, and it broke it, and I don't have, for me, it's not substantial support enough to wager it. But that's just my view on that. What else are we looking at? I'm losing a bit track of things we've discussed. So what we need to discuss is still, we can take a look at this dollar yen from a different perspective. Price is breaking through that weekly pivot, and it does have good momentum. Yeah, I had a bit of doubt, to be honest, because of this support line like that. But you can see price did break through it, so it wouldn't have been that bad as an entry. But okay, that's a thing of the past now. Although you can always wait for a hook back to that level and then try to take the pullback. Now that we've broken through L4, right? Hopefully, maybe even pull back to 101.65 or 70 for that downside. That's something to keep an eye on. How about this one? Let me put the other template on. A lot of momentum to the downside. There's no doubt about that. Tremendous momentum. 15-minute chart remained in momentum. So yeah, that could have been a break right here. In fact, we were not looking at breakouts today. Happened at the beginning of our session, in fact. And everything was aligned. The hourly was down, the 15 was down. So if that happens, we can look at the 5-minute chart, and we had plenty of space because all the pivot points were above it with a stop loss just above here. That's the same like the euro yen, basically, right? So it would have been about 94, about a 20 pip stop loss, and still in that trade, although it's retracing now. This could be a fib trade, in fact. Now we do have a bit of divergence, but I do think that the hook back, we'll see one more follow through. There's a decent chance of that. So that could be a fib trade like this, and wait for the 61.8, for instance. Same stop loss, and most likely we'll see respect, and if anything, at least down and some consolidation, and then like this. If not, we'll see an upside break of the triangle, but you can then move it to break even and avoid a loss. So that's a fib level to be aware of, in fact. Euro yen, also continuing its downside momentum. Here too, pretty good breakouts this morning. Early breaks today. Didn't expect that. Market has been quiet, and if anything, broke a bit later in the day, maybe more in the New York session. This is well, it seems a long time ago that we had such a movement in so early in London. So it was a bit. Wouldn't expect that anymore almost, but we are getting a break, pretty big break on the EJ2. Here too, the moving averages were already aligned since here. So that means on the 5-minute chart we could have taken a break. That's the 50. Sorry, that's the 5. The 50-minute chart remained aligned since here. Any breaks of the 5-minute fractals would have been good. Here, for instance, was the first one. And that trade, just like yesterday, is already up close to around 35 pips. Moving nicely down here too, the same would be valid for a fib potential. We do a fib on this breakout, or maybe even from here it's better, like this. All right, so 50 fib for instance, 61.8, those could be all hookbacks, deep hookbacks, but it could happen. So that was a good breakout just before our session, in fact, this one. Yep, about 2.5 hours ago. How about the pound dollar? Bounces through, no, from 50. I would probably even wait a bit because the AO can go back to the zero line, which means we could do either one of two things. We'll see a triangle here, or we'll see a zigzag up to the 61.8, like that. So I would still have patience with that, and we'll let this go back to the zero line. Now, mind you that although we got follow through here, there's always a risk that this is the last follow through, but for the moment, let's not assume that. We were looking at the EJ. Let's move on. New Zealand yen. Same story, in fact, that also already broke out. The pound yen and the euro are just difficult to trade because they've moved so much down. So it really doesn't make sense to look at those. Those have traveled and traveled. So we just need a bit of retracement there. Otherwise, it's too risky to trade, in my opinion. The euro even hit the D S3, so I don't know. It seems a bit. I wouldn't go, shorting below S3s and above R3s personally. Even though we could still see some breakout, I would rather look for breakout trades that are, a decent amount away from that at least, from the R3 or S3. Now we've reached S3, so that would disqualify it, right, in my trading plan. So I wouldn't look at those. Let me see if there's anything. Unfortunately, it seems like everything is either moving. So let me summarize it. I don't want to make it too confusing, but the odds have moved too much at the moment. The yens are breaking. and have broken and gave good breakouts earlier. The only thing that remains are hookbacks potentially. The euro dollar, pound dollar, same thing. In fact, hookbacks. Kiwi is breaking as we speak. We can take a look at that in a second. Is there anything else to discuss? Let's take a look at the minor crosses. Euro CAD could be the same thing as the euro yen, for instance. Also, a pullback might make sense. We broke through daily pivot, and I would say we got more space to go. We broke through L3. We just need a hook back. Same story, in fact, funny enough. Probably pound CAD, the same stuff, I would say. Here too, a bit of pullback. So now these fibs will be useful when we're waiting for the pullback, but don't be too quick on those. What you can definitely wait for is the 5-minute to go back to the zero line, for instance. Otherwise, I wouldn't trade it. Swissy is a bit of a mixture versus all kind of various pairs, so I would be not that interested. Too much mixture there. That means Swissy is relatively quite neutral, probably. How about gold? Let's see what happened yesterday. Yesterday, a small down day after some hours up, followed through, hours up, followed through some small bear flags, followed by momentum continuation. Let's put fibs for the fun of it because this is a fib webinar, so let's put fibs on this downside like that and see where price is now at the moment. It's really breaking out very impulsively. Big drop. Not even retracing down up to the 23.6 fib. But there could be some more follow through even. I mean, this is breaking and breaking. Yeah, this price could still retrace back to about this level, I would say, roughly in here. But that could be the resistance again for one more downside to 1240, something like that. Then eventually we'll get divergence and we'll see a bit bigger retracement. But for the moment, wouldn't expect it necessarily. So whatever wraps it up, I guess, from my side. Any questions? Maybe we got Vigantas is asking. No, that's an old message actually. So I got one answer. Bob took the EJ, 45 pips. Great job, Bob. 45 pips is very close to that 421 as well, Mark, I believe, if you use this, roughly the same stop loss at least. So great job. And also the New Zealand yen, so awesome. If you also took those trades, by all means let me know. Or if you have questions, primarily looking for pullbacks, I would say on the euro dollar, pound dollar, euro yen, and which one? New Zealand yen, pound yen. That's about it, I guess, for the moment. Oh yeah, the Kiwi, of course. Kiwi. What happened with the Kiwi so far? We had the breakout candle. We had one bearish candle again. That's good. We want to see that. That's nice. So we have still 4 candles left. If this is 1, this is 2, 3, 4, 5, right? So if we see the 3rd one here, the 4th one here, and the 5th one here, then we can take it off or try to reduce the loss. If you still like the trade, I mean, you can still try to see if we get a top in here and one more down move, and you can move it above this fractal here, right, to reduce it by half. If we do get the follow through, then preferably, let's take a look at the hourly. Yeah, what I wouldn't like to see, for instance, in fact, is already a break above this hour's initial high. Although candle hasn't closed yet, this hour's high, for instance, is not something I want to see broken. Otherwise, the bears are not in control anymore. So we could actually move our stop loss, I think, now or 10 minutes from now to about 84, 87, because there's no sense to stay in it if it breaks through that level, or 84, 88. So that would reduce the risk already by 9 pips, reduce it about half. You never have any guarantee about sufficient follow-through. So especially on the lower time frame breakouts, it's always good to be on top of things and be more aggressive, I think, with the management. I think it would suit the most traders the most because it's not easy to live through retracements, especially if you're looking at lower time frames like this 15. Now, if you're swing trading, it's part of the deal. Otherwise, you're not going to manage swing trading if you can't live through retracements, in fact, because there are always going to be retracements, or most cases. So, yeah, 8 minutes from now, top of the hour, if this is the high here, which it should stay the same, I would move it to 84, 88, right? Depending on or 84, 87 plus your spread, let me say it this way. And hopefully we get a continuation of these hourly candles to the downside, like we did with the euro-yen. The euro-yen was relatively easy sailing yesterday, wasn't it? Because when it hit our entry at 138.86, it 1, 2, 3, 4, 5 candles. It didn't move a lot, but it didn't push through this level 2. So after the 5th candle, it was a very easy decision to reduce the risk by moving the stop loss above here, and boom, we got the follow through. Once you get the follow through, it's really easy sailing because every candle is making lower, lower, lower highs, right? And you see a bit of upside and a bit of downside, and then you have this AO going back, and boom, that's it's the end of the trading day. So this part is nicely going our way. Lower lows, lower highs, so that's relatively easy. Will it be the same with the Kiwi? We don't know, right? So that's why we have to monitor it and keep an eye on it. But 7 minutes left, and we can at least reduce the risk. So even if this does turn into a loss, okay, you lose minus 0.5 here, 5 for instance, but the other one had plus 4.17, right? So there's still good balance there. But anyhow, I'm talking in circles now. I don't see any questions. So thanks for joining and spending your time with us today, or with me and other traders in the chat. And tonight, Nenad and I will be talking about breakouts. What are good things to keep an eye on breakouts? So it could be worth it if you like breakout strategies. Join us then today at 5 p.m. UK time, 6 p.m. Central European time. Let's see, I got one question. Well, basically, using for breakouts, I use 1 hour, 15, and 5. But still definitely use the 1 hour because I want to see the momentum on the hourly, preferably. I mean, it's not a fixed rule. You could use only 50, but I do like to use the 1 hour, I have to admit, because without the 1 hour, you need to be a bit more critical about 15-minute breaks. Then you can use currency correlations maybe, for instance, as a compensation. But I do like the hourly because you can see by looking at the hourly, look how much momentum is pushing it to the downside. That I like that confirmation. I like that extra, it just gives me that extra boost kind of in a way to think, okay, this is, the market is really moving a lot. So even if I don't win a trade, there's little chance it will go drastically against me. And if you have a tight trade management, and if it doesn't go your way, exit, then it will probably be relatively a small loss because we have plenty of time to reduce our risk on that. That's the advantage if you trade with such a momentum. Even if it doesn't go in our way immediately, the loss will be already could be a break-even trade, or the loss will be relatively small. So it's like that 1 hour momentum here. 21 and 34 EMA, or you can use 13 and 34 if you want a bit faster configuration. That's what I'm looking into now. So I hope to see you tonight, and have a great trading day, and see you soon. Cheers.